Here we are back with you on the Market Day Report. I'm Marlon Bowling with you coming down the home stretch on a Wednesday as everybody kind of gets positioned to where they want to be before those reports come out tomorrow. And we'll take a look at your grain trade here for you in just a moment. We'll bring in a little extra help. It's none other than Mr. Todd Bubba Horwitz of BubbaTrading.com, and there he is, sir. Thanks for joining us here. I appreciate that. The soybean trade caught everybody's attention today. Kind of a surprising move to the upside during the session there. What was behind that?
Well, I mean, Marlon, I talked this morning. I said that I thought, if we held over 1040, that there'd be a pretty good rally, have a chance to run to 1080. So we're up around 1060, and there looks to be buyers. It looks like we can continue to push higher here. I mean, again, as long as we can stay above 1040, I think 1040 to 1080 is going to be the range. If we break back below it, $10 will come back into play. But again, the money's showing us that they want to be above that 1040 and want to run to the upside. So I think they make a run at the 1080 level.
Right now, March is 12 3/4 higher at 1055.5. We're about 4 cents off our earlier high of the day. The May is up 12 3/4. Last trade 1066. And September, that's kind of that transition month before you get into the new crop. It's 8 3/4 higher at 1047 1/4. Back to the corn market, we'll take a look there. The March contract is now a penny higher at 369.5. This is another one of those that Todd, you and I have talked about. In fact, this morning on my Commodity Wrap show on Rural Radio, channel 147 on Sirius XM, we were talking about the fact that the corn and soybean trade seems to be kind of range bound here for several months at a time. Even though the soybeans have a fairly wide range, they seem to be stuck in that. And this is a kind of the time of year, I guess you would say, where people really get chopped up in the market as the stops just kind of get picked off on the high and the low side of the range.
That's right, and you get in these consolidation ranges, and they're the most impossible and most torturous to trade, and that's why you have to be very careful. But we're waiting for here now. We knew 365 was a good level in corn that should hold. The key is if it can't break through 370, then it's going to go right back down to 365. If it can get through this level and break out, just like the beans did the other day when they got over 1040, if we can get through here, we're probably going to 380. And I do love the corn, but again, it's very challenging to try to be active in here. And if you're a farmer producer, what you should be looking at is just locking in a higher basis and not worried about the day-to-day activity, because right now it's very choppy. It's very challenging to make the right call here.
So I guess if I'm reading the tea leaves right, in what you're trying to say, you're saying don't exactly aim for a home run this time of year. Just maybe try and pick off a few cents here and there when you can.
Well, yeah, but I would prefer, if you like traders myself, I don't get involved actively trading. What I'll do is I'll pick the level, like I'll buy 365 again, and if they show me they can't get through 370, then I'll get out, and then I'll wait for the pullback again, because I don't really want to get short in this market, because I do believe it's going to break to the upside. So I'll wait till it comes back down to me.
All right. Are you still a fan of the wheat? Let's take a look at the prices here on Chicago here on the March contract. We'll pull that up here for you. 425, you say. All right. We're at 430.5. We're down 1/4 cent.
Oh,
well off our low by about 3 cents. Now on the Kansas City market, there we have the March up a penny and a half at 441. So are you friendly or not here at this level?
I like wheat a lot. Again, I believe wheat's going to be the best performer all year. It's been the best performer for the last few months. I think it's going to continue. I think you look at 425. It pulls back there. You want to be a buyer. I think 430 is okay. I think our next spot to worry about would be 435 to 440. But I'm not at all concerned. I will be buying every pullback in wheat when it comes back down to the levels that I'm looking to buy.
Okay, on the spring wheat in Minneapolis, right now we're trading just a half cent higher at 556. And then on the cotton market, as we head into the break, we have the March 23 higher at 75.32. July up 21. We'll come back in a moment and talk more with Todd Bubba Horwitz of BubbaTrading.com in Chicago about our livestock trade. That's been interesting. We'll find out more right after this. And we're back with you here on the Market Day Report. We're talking with none other than Todd Bubba Horwitz of BubbaTrading.com. He's there at the trading floor in Chicago. Kind of wicked market action here on the livestock side today. We had the cattle market that, well, it didn't trade too badly on the open, but it really got weaker in the knees as we got that Fed cattle exchange reporting some numbers out of there. Prices over $1 under a week ago. Let's go take a look at our current futures on the live cattle board right now. Wow, April down $1.77 at 114.73. That's within a nickel of our low of the day. June down 133 now at 105.25. And if you throw out that February contract, the near nearbys are leading the way down. Feeder cattle trade, here you have the March contract currently at $1.72 lower at $122.50 per hundredweight. That is basically about $2 now off our earlier high. April down $1.60 at $123.02 per hundredweight. How much trouble is this cattle market in here, Todd?
If you listen to Rural Ready Radio in the morning, you'd know that we were going to be selling these cattle today. They look like they need to go lower. As I said to you earlier, seriously, I think I'm looking for 112, 110 in the fats, and I'm looking for under 120 in the feeders. I think that I'm looking to be a buyer. I'm searching for an opportunity, but here I think we're going to see some selling pressure. I think we had it far too good, and I think we ran far too fast off of the big sell-off that we had a couple of months ago. I think we got overextended on price and tried to price in too many good things. There are a lot of good things happening out there, but I think that it'll take a little bit more time to develop, and I do look for good prices further down, but I expect to see a little bit of correction here so that we can actually come in and buy some more.
And this morning you brought up the fact that the deferred contracts on the cattle actually filled that gap from last week, but the nearbys did not. They never did quite get that done, did they, today?
No, not yet, but there's always time. But again, the nearbys obviously going to be very active, and I think are going to be. It may fall under some more pressure. I mean, we could see even here in the last few minutes some selling, and I think it looks to continue into tomorrow.
Okay, now the lean hogs. You and I have been observing this market in amazement as it continues to rocket higher until about an hour into the trading session today. In April lean hogs, it's like they kind of flamed out, and after posting a high of 72.65 with new highs on the move, now they're at 71.43. They backed off of that high by $1.20 now. We're currently 75 lower than yesterday's close. May is down 28. Is this something to where you're ready to throw in the towel temporarily, or do you think there's more to the upside yet?
Well, I thought there might be a couple percent to the upside. Now, you know, in all fairness, I've been negative hogs for quite a while here, so this is what I've been looking for. It looks like finally now I'm not ready to jump back in and say they're going to go lower yet, but I'm very close to saying that because of the way that they did flame out. This looks like it could have been just the very end of the last bit of buying. I think the squeeze between February and April, look at what happened over the last couple of weeks, April. I mean, Feb went crazy over April. So I think what we're going to see here is this might be the flame out. I need to watch. I need a little bit more evidence. I'm not bullish here or positive at these prices today. I think we needed a little bit of a pullback longer term into the summer. I'm very bullish, but I would not be bullish unless we get some sort of a pullback, because I think up here it's been an unhealthy trade and a lot of chasing the market up, and I think that's always a rough sign for traders.
All right, so Todd, I appreciate all the comments on the markets. In fact, you did such a wonderful job. I'll invite you back and we'll chat for a little bit on the evening news tonight as well, if you don't mind.
I can't wait. Thanks, Marlin.
All right, thanks, Todd. Todd Bubba Horowitz of BubbaTrading.com in Chicago. The market meister right there.
Thank you. Well, you're one yourself, Mr. Marlin.